when things are more volatile, people look to make decisions. The last thing you can do is just sit there and be paralyzed by it. There better be action that you're considering or willing to take.
Welcome back to ACS Portfolio Perspective. I'm your host, Andrew Pace, Chief Client Experience Officer at ACS. Today, I'm joined by Erik Anderson, Chief Credit Officer at Northland Capital in St. Cloud, Minnesota. Erik joined Northland in 2008, right at the start of the financial crisis, as a credit analyst, and he's been there ever since. Over the past 18 years, he's helped grow the company from roughly $55 million in annual originations to nearly $500 million, and from a $100 million portfolio to more than $1.2 billion in assets under management. A lot of that growth runs through a syndicated business he's helped build from the ground up starting in 2014, a business that now moves more than $160 million a year through 10 different funding partners. He holds a degree in actuarial science and statistics and an MBA, and he brings a data-first, process-first philosophy to everything Northland does. Erik, welcome to ACS Portfolio Perspective.
All right, thanks for having me, Andrew.
When you agreed to do this show, and we spoke at the funding conference a few weeks ago, I was honored that you wanted to participate. So, again, thanks for being here. Let's talk about the unconventional path to Northland Capital. So, before getting into scale, capital, portfolio strategy, I wanted to step back and talk about how you actually found your way into this industry. Your path here was anything but linear, and I think it will resonate with anyone who thought they had it all mapped out until real life intervened. So you were a math and actuarial science major who had a clear plan, and then life intervened. Walk us through what happened after graduation and how you ended up as a credit analyst at a community bank.
Yeah, no, it's funny. Like my path was anything but clear. Like even getting through college, I probably should have spent more time actually thinking about that path, to be honest, but I was having a lot of fun, as I'm sure a lot of people did. But I ended up graduating with the degree, and my path was going to be, the actuarial route. So it's a series of tests that you take, and starting with, I sat my junior year in the spring of in school, and at the time I was playing football at Minnesota Duluth, and it was during spring ball, and I don't think I put the time in to study. In fact, when I say I don't think, I didn't, and it was more of the dry run test. So I sat down for it and I said, "Well, that test was pretty hard, so I should probably pay attention here a little bit more in my probability class." So I ended up graduating, and then that spring I sat for the test again. This time I did put in 300 hours studying for it. And I think I ended up with like a 6. I think you needed a 7 to pass out of a 10. And at the time I had moved down to St. Cloud from Duluth, which is, really long ways, 2 hours further south. And, I was getting married in July. I just, that stage of life where you're just not certain about what you really want to do. I was not one of those kids. Like I had no idea what path I wanted to take. I knew I had a math degree that, was probably a plug and play situation. But I had no idea. So I ended up, they say pivoting or just applying for jobs. And I actually, I Googled what I could do with a math degree and combined with finance, and credit analyst came up. And there was a job posting at a community bank in the West Twin Cities metro area. And I ended up applying for that. And I'd never taken an accounting class, never taken a finance class. I had an economics minor. So there was, some kind of, economic theory to things I've understood. But I ended up getting hired on at Landmark by an EVP there, who was just a tremendous individual. And it kind of cut my teeth in small business. And that was the best part about it. Was the first deal I ever saw was a small business deal. And I remember it was actually a butcher shop, and their specialization was spiral hams. And it was in Coon Rapids, of all places. And like I remember specifically, and the EVP asking me, reading the first credit presentation, what I thought of the deal. And I think my opinion at the time was I would never do this deal. That was the first deal I ever saw in my entire life. So we started off on the right foot.
Right.
And after that, it was, I think, 2.5 years there. Um, just really got to be in banking and commercial lending. I thought my path was going to be in commercial lending, just because I enjoyed the competitiveness of it, the gray, so to speak, of lending, and got through a lot of RMA classes, build a network. But I was driving an hour each way for my commute, and my wife Amanda and I wanted to start a family. And I know an hour commute doesn't seem like a lot, again, for a lot of people what they navigate, but our situation was that I didn't, she was working as well, and we were transplants in the St. Cloud area, so our daycare options were limited, and I just knew that I wanted something in St. Cloud in that area. So so I kind of started putting feelers out there, and one day I got a call from Tracy Llewellyn, who is the chief credit officer at Northland Capital in 2008. And she had been talking to one of my friends that I knew in the St. Cloud area. And I was kind of with feelers saying that they were looking for an analyst at Northland. And so I ended up going in for an interview, and I had never, I think my experience with equipment leasing was entirely more of that high rate play. We had dealt with a couple leasing companies, and that was my impression. I never actually truly been in like a vendor equipment finance model, or ever even knew anything about it. But I had my first interview at Northland, and really hit it off with Willis, with Beth. But I wasn't really sold on the idea of the ticket sizes. I think I just come from the last deal I did at Landmark was about a $7 million biodiesel plant. Like the complex credits were far more interesting, and then I was concerned if I got into equipment finance with Northland, it would be all small ticket. I would get bored, or some scenario I wouldn't have that again, that diversity of deals itself. The niche business. But so I called Tracy, and I said, well, I just don't think it's going to be a fit for me. So we'll pass on maybe stay in touch, but just probably not a fit. So 30 minutes later, she called back, and she literally said, Willis made me call you back, and they really want to get you in again. And I think at the time I just said, wow, maybe this is, everybody wants to be wanted, right? Like it's a really good feeling, and it's a rare thing, to be honest. Like as you go through life, you grind so much, and I think it's more meaningful when out of nowhere people just said, no, we want you. And I just kind of took it as a sign itself. And I talked to Amanda, and I said, you know what? This is where I'm supposed to be. And so we scheduled our interview for that April. Actually, April, I think it was 18th. It was my anniversary date, maybe 17th or 18th. And came back in, spent a bunch of time with Willis, and then now Gabe, his co-founder, and like it felt like the place that I needed to be. I think the environment, the culture, how Willis was, how leadership was, how laid back I would say the atmosphere was. Coming from a stuffy community bank, and it is stuffy. Like it's the things that you see over time. So I ended up taking a job at Northland, and the best part was, I started my first week. I started. We have a weekly Friday meeting, and that's been a staple of Northland for forever, as far as I can remember, as my time, and it dates me. I think it's we just celebrated our 30th year anniversary here about 2 weeks ago, and that meeting, it's a staff meeting, is kind of visibility. Where are we traveling? Which vendors are we meeting with? Company updates, functional credit operations, how we do last month, et cetera. And at the end of the meeting, Willis stands up and he takes out $40 from his wallet and says, "All right, new guy, Erik, you're buying beer. And I think that was the part that cemented for me just the work hard, play hard, the culture that I belonged in. And since that time, it's my favorite part about Northland has always been it's the work hard, play hard culture, but it's allowed me to be my authentic self, and where you can just let it fly. Um, but it's you're accountable to your teammates, the people you work with. You're accountable to the leadership, your shareholders. But bottom line, the authenticity it rules the day in anything that we do here, and I've just fit, and it's allowed me to progress and grow, and they've had a lot of trust in me over the time. But you talk about that unconventional path to equipment finance, like it was anything but boring. It turns out the process flows, the travel, which I just love, to be honest, to be able to go nationwide and to lend anywhere, and to be accountable to our shareholders, to our ownership. Like I just love that environment. It's the freedom of, I would say, well, capitalism. I mean, bottom line, but we have the ability to, with our money to, if we wanted to go into, say, technology tomorrow, great. We'd probably get killed, but it's still an option that we have. We have the freedom to do so. And I love that piece about equipment finance. And the at-bats that you get on a regular basis just allow for what you thought was going to be a pretty rote environment with just the same thing, more like conveyor belt factory work. It is anything but. And every deal is different. Every day is different. And even if you're in those niche, focused industries that we are, everything is different. And variety is, they say, is the spice of life. And it's been great. So,
well, let's go back to that $40 Willis gave you. So did you go with quantity or quality when you bought that beer?
At the time, it was like, well, what do you buy? And me at the time was definitely quantity. It was a lot of light beer.
Gotcha. Okay. Just curious. Didn't know, you gotta make sure you have enough for everybody there, right? So
I think it was a couple cases of Mick Golden Light, because at the time, especially the timing of it all and the financial crisis, I think we went through quite a bit of it.
And not to mention 18 years ago, there's not that many microbreweries and craft beer. So
I think we've all matured with both, just the choices we make, and then our palates too, right? You can tolerate the IPAs, and I still can't, but it's more of a brown or amber kind of guy. So.
Gotcha. Maybe something we can debate later.
Yeah.
As we digress. So now that you've been at Northland for 18 years, working your way from analyst to chief credit officer, what did the early analyst years teach you about the equipment finance business that you still carry with you today?
I think number one is, be accountable to your decisions. This very day, and own those deals that you do, and get better from ones that don't turn out. I have I have a funny story. Like for years, like I have an ability to remember transactions and deals that I worked on. I used to call it my didactic memory, and so I always said didactic for years. And I was up in at my mom and dad's. We were at the cabin here about 3 years ago, and my sister's an educator, a Spanish teacher, and I go, yeah, I've got didactic memory when it comes to like transactions. And he goes, you're using the wrong word. I go, oh, what is it? It's eidetic, you idiot. So, anyways, well, yeah, it's eidetic. That it's photographic. Yeah. So, back to like remembering deals. I think that's the biggest thing over time. Like I've done thousands of deals, but I've been blessed with the ability to remember transactions. I especially remember deals that went sideways. And I think the biggest lesson, and I think I learned this years ago just through sport, and you need to be able to evaluate, um, certainly game film, or I think the military calls them after action reports. Um, you need to be able to actually be hard on yourself and have the ability to have thick skin with your peers as well, and your peers to be hard on you as well. And decisions you made, should we have done this? What could we have done better? Get to the why. Would we make the same decision again tomorrow? And we've created a mortality and morbidity committee, which stole that from the healthcare industry when they have a dead body. How do we get better? What's the cause? What did we miss? Could we have done things differently? Structure, asking questions, things like that. So I think the biggest takeaway and bottom line has always been, can we get better after all these years? And the best part about what we do is we get so many quote unquote at bats that we can constantly get better doing that. So as an analyst, the same thing. You evaluate, did I do it the right way? Could I have done better? How was that? And then taking it forward. Can we continue to get better? And treating our analyst team the same way. Our team lead now, he runs all those M&Ms for the analyst team, and it's stuff that I get to sit in on. And still to this day, it's being close to it. It reminded me of like, well, I would have done that. And even today, still, I still jump in the queue every now and then, probably much to the chagrin of Joe, our team lead there, because I probably make a rightful mess of things when I do get in, but I still like to underwrite and see what our sales reps are dealing with. That's another takeaway from like the analyst piece. I always like to be close to our sales reps. Always said we've got the two parts of credit are, you've got the quantitative side, which we're able to do on the app only and by pulling reports, but because of proximity and how we go to market, the qualitative piece is a challenge. So there's quantitative and qualitative, and we are entirely reliant on our sales reps and their relationships and the information that they're bringing on the qualitative basis to us. So the tighter relationship that I can have and more, fundamentally understand where our business is coming from, it certainly assists with the qualitative, but then also the relationships between certainly credit and sales is, it just makes us that much better. It's not to eliminate tension and conflict, because I think both make us better. And everybody's trying to get to the right decision. And, certainly those are the takeaways over time, because that's number one. When you're an analyst, you make a decision today, you're not 100% right on that decision. Like you won't know for 2 years. And
you're making a decision based on the facts that you have today.
Yeah.
You can't predict the future. So, it's very difficult to, predict what may change over time.
So as long as we all understand that, like we've always felt that it's our sales rep, we all come to a situation where it's like, these are the facts and we're going to adhere to our fundamentals, but the reality is neither one of us is right now. So
yeah, right. But if you have a process and you have systems in place, and you have the data, right? You stand by the decision based on those things.
100%.
So what strikes me about your story is that it's not just about longevity. It's more about evolution. And as Northland grew, you identified a constraint that threatened to slow growth. And instead of accepting it, you helped design a solution that fundamentally changed the business, which brings us to syndication. So back in 2014, you saw your sales team was competing with one hand tied behind their back, and obviously bigger players could offer things maybe Northland couldn't. Can you walk us through how you identified that gap and why syndication was the answer?
Yeah, I mean, we, for years, Northland had always sold, right? We'd sold in pools. It was more balance sheet management. And we had these great relationships for years. And, uh, that very thing, I always felt our sales reps and we as an organization, and I felt that from day one that we could compete with anybody in the entire U.S. I've always, uh, just always had that feeling. I'd love to be in the room at least. Like, just get me in the room and we'll see. I might not win, but just let me compete.
Mhm.
And I've always felt that about Northland as a whole. I think we had more constraints, and as independents, they constantly go through this. But we had great relationships. We had tons of opportunity, but where were we a little? What are our limiting factors? And certainly cost of funds was one of the limiting factors, and the second one was certainly app only thresholds. Um, our risk tolerance as an organization, our size, both things were such that they were like lower on the app only side, and then pricing we were higher than we wanted to be on, certainly in the commercial space. So we had started back up. We talked about being able to sell to other banks, and we didn't have any real, a point for the sale itself. We had always left that to our sales reps. If they got the deal in, we had a couple of banking relationships where they could talk to them and broker the transaction. And we had always had this thought process too, where like, man, we're turning down so many deals. What if we could get all our turn downs done? And I think what we changed in 14 was, number one, we consolidated all of our syndication efforts, or all of our sale efforts, into one place. And I took on that responsibility. And then number two, we said, well, what if we went up the credit spectrum? And we started going after better credits with better pricing, better app only, more capacity, and maybe some asset types that we weren't comfortable with. Like, for example, semi trucks. We're not a huge fan of semi trucks, but for mostly because it's, again, just where we sit. We don't like the types of credits that we do. It's just always been we didn't have any luck, and you can attest to this. Like, once you get burned a few times on rebuilds and getting them back, and you lose 70-80%, it's enough to make you reticent to go back into and keep doing it, right? So we consolidated. We started really moving all syndications through me, and we built all process internally. So we were able to match. That was the other problem we had, where our process, if we were going to broker it, it was just all disjointed from our true app flow. And we knew that if we were going to be successful, we needed to make the syndication process aligned with our internal process, so that it didn't matter, or as far as the sales rep was concerned, the process flows that we used were all the same. So with doc packages, we were billing and collecting. Everything was all the same, except for, and our sales reps did just a tremendous job of this. They just need to manage customer expectations a little bit better and a little differently, not better, differently. So we could take down a deal in less than an hour if we were underwriting ourselves. But with the one-off syndication model that we had, we needed to source that and then say, all right, for this trailer, we've got this over at, for example, like Wells Fargo. Their turnaround is going to be 4 to 8 hours. So let's manage the expectation with our dealers, but then it allows us for that higher app only threshold and a better price point that we can just where we're managing our own capital. So we did that over time. We tweaked it, and I think the first year that we signed up with, Wells was the first one we signed up on the one-off relationships that we had, and they said, well, we need to do 5 million, because 5 million was meaningful for them to do business.
Mm-hmm.
And so we did everything, but I think that first year we made like 6.7 million, something like that. So we made the number. And then after that, it was kind of off and running. So the whole thought process was develop relationships, which is go back to this core Northland stuff, right? Relationships first, develop those relationships, and then over time, just grow them. And the best part that we had going for well, me professionally and Northland, we had an individual by the name of Chuck Sell. Chuck was a longtime sales manager at TCF and in Norwest prior to that. And Chuck was instrumental, number one, in getting Wells on board, because we had sold to Wells for a long time, but then he had the relationship there. He knew so many people, industry contacts, and what Chuck did for me, we kind of talked about earlier with network, right? So I always equate it to, this is the second Jerry Maguire reference here today, but it's the scene where Jerry Maguire takes Cuba Gooding Jr. through at the Super
draft. Yeah, the draft.
It was draft. Okay.
Yeah.
And that was, I went to my first funding conference, and Chuck Sell did that for me, and he introduced me to his entire network he had at the funding conference, and it was just the most awesome thing for my career, and what it allowed for. I mean, number one was, again, legitimacy to actually know what it got me to a place in equipment finance where it felt so good, and we're to the point, because it's, networking's hard. Like, if you're young in the industry, it is hard to find opportunities because there's a cost to send you wherever, the company needs to send you in order to network or to meet people of your age or like a peer group. And it takes special circumstances to get there. And I was fortunate enough to have that at the time, and it just kind of all grew from there. So it grew from the first year of selling $5 million to $10 million to selling $20 million to there were legitimate numbers where we were. I think I thought at the time, is like, man, wouldn't that be cool if we ever did $1 million in fee income in one single year? Because it felt like that was like legitimizing what we were doing.
Mm-hmm.
But little did I mean, it turned out much better than I ever anticipated. In that, once we got going, I think we brought on, TCF, we brought on Sumitomo Mitsui, we brought on at the time, Bell. It was just, I think every year we bring sources, but the biggest challenge for us was always going to be, you had to be meaningful or intentional about who you were going to do business with, because number one, you had to fit our platform. They liked the business that we were originating. But number two, we had to have enough volume ourselves that it was meaningful in actually, forming the relationship. And that was always it's always, top of mind for us when we start talking to another, funding relationship is, what's a meaningful number to you? Because we don't want it to start off where, it's the two-way partnership that we look for. And if the expectation is much higher, then we're probably not a fit right now, because you want to be able to really lean into your best partners and those that you do business with. And because again, they're there for you and you expect them to be there for you, but also that's just how relationships work, right? They have to be two ways or two-sided. So over time, it's kind of grown to where we got to 2020, and COVID was a huge takeoff point for us as an organization. And the number one thing I think that syndication brought us overall was, I didn't realize the impact it would have on our vendor business. And the best part about it was we got to say yes more often.
Mm-hmm.
And we would get transactions done, and we effectively used our balance sheet on deals where we grew both on balance sheet as well as what we were selling as well. We're all the same deals ourselves, these customers, and it just allowed us to scale. And that was the benefits. So we saw volume numbers go. We had a hire on our sales team that pushed into certainly on the C&I of the commercial equipment, construction, environmental, which just a tremendous growth engine for us. And yeah, I mean, bottom line goes back to what you said originally. What syndication allowed for us, it gave our sales reps a tool in the toolbox and put them on a more equal playing field with, again, the large banks in the U.S. to who we were competing with. Because our asset classes, we're going against the biggest of the bigs, because it's core business stuff. It's hard assets. It's desirable equipment, and you have to be able to play more under the same rules. Otherwise, it's one of those scenarios where it's going to be very frustrating. So, and our sales reps have taken and run with it, and the company as a whole, we've adapted. We've kept tweaking. We've kept trying to improve the process of how we originate, and on top of that, it's things we've been able to stand by, and that's on the servicing component, and it's hold up our end of the bargain. So, it's been really fun to just to be a part of it, and to actually see these things grow from the infant stages to now where it's a meaningful rev gen, where we're not just doing 1 million in annual fee income, we're doing several, and it's a really cool thing to see. I mean, it's my baby truly at Northland. Like, it's a funding conference last week or 2 weeks ago when we saw each other. That's by far my favorite week of the year. And like, I love everything about it. It's the energy, the people you see, and like the prep work that goes into it. And now these days, it's been fun to see, Joe Tucholsky, who's now leading our syndication business, like him take off himself with that same, network plus, right? It's, he's found peers, in the group itself, where now he does his thing. And like, it's awesome to see a part of our business, where we be able to nurture, younger talent there too, and develop into it. So it's, I mean, tons of ancillary benefits throughout, they've seen, visually from the company, where it's the growth, and obviously growth, trumps all when it comes to what you're able to do with, certainly career paths or within your organization. But, yeah, it's been fun. Sorry to get a lot long-winded.
No, that's awesome. That's what makes this podcast series, going down those rabbit holes. Growth stories are powerful, but they rarely happen in straight lines. What makes your perspective particularly valuable is that you have lived through multiple credit cycles from the same seat. Joining Northland in 2008, ironically, happened to be the same week Lehman Brothers collapsed.
Yeah.
You've described actually being excited by the volatility while others, were scared. What does that tell you about yourself, and how has that orientation shaped your approach to credit?
It's been interesting. Like, when I joined in 2008, I was broke. Like, I had not $1 in the market. I just got out of college. Well, it's probably the pour with my money anyways, but regardless. I mean, I was in a unique perspective. I didn't have any kids, and just young and dumb. And to see our chief credit, who had kids, to certainly more invested, and then on ownership of the portfolio itself, it was a stressful time. But I guess I've always viewed, that volatility as, certainly more opportunity, or going to create opportunities for us if we're in the right position. And, the wild part about all of it, like, it's, for whatever reason, I when things are more volatile, I think that's just my personality. And, it's, as a steward of our portfolio, and I do say steward, like, I'm more of a protector personality than anything. Like, I have such respect for, the position I have and decisions I make. I understand the weight of my decisions, and mostly I understand who I'm protecting, and that's Northland as a whole. That's my coworkers. Um, that's our shareholders. That's Willis at the first and foremost. Like I understand the weight there, but when it comes to volatility and actually pushing forward decisions, like I think I've always been in that scenario where I'm also built for growth, and decisions that you have to make in order to get there. The volatility. I think the other part I like about the volatility is, rather than talking around decisions in peacetime when things kind of get dull and you start dealing with a lot of the more community decisions or community based. I think when you get into volatility, people look to you to make decisions, and I think that part of it is, I think it lends more to my personality. They always say like there's wartime generals, there's peacetime. Right? It's there's always times where I'm not sure I was built for peace, and it's a weird thing. And it's probably more of a limb fact for me personally, but I just, I guess I've always had and this stems from my, my own genetics. Like my pops is this way, like it, and that's why I think the continuous improvement is such a thing for me. Like there's always something you can be doing to be better on a daily basis, and it just so happens when you get into volatility and uncertainty, the last thing you can do is just sit there and be paralyzed by it. So there better be action that you're considering or willing to take. And I think bottom line, like that's the difference in so quote unquote when things are going really well, it's just like, well, are the actions that you don't want to mess it up. And there's a dichotomy there, and it's been a challenge. I mean, candidly, it's a challenge for me. Again, we're a mature organization, and there's times like as where and every organization should, like we're tremendously successful, and it's those times where you start looking around going, what if I just started some shit today? But yeah. I mean that's really
go break some stuff.
Yeah, go break some stuff and never do that. But that's the other side of it, and you have to be able to balance it. And to be honest, like you talk about a career challenge, like that's been my challenge. Like that's where I've needed to grow over time, and continue to need to grow. Like it's just like anything, I need to be better there too. And but it's been talk about that volatility, 08, 20.
COVID, yeah.
I mean, COVID was just that. Like it's you go through those things. Like it's funny when you look back on it. Like COVID was 6 years ago at this point, and it's incredible the things we went through, and you have to laugh at a lot of it. But then also, like there were so many things that we did as an organization that made us better, that set us up for the next 5 years. That wouldn't have. I mean, they were long-term trends that we had talked about for a long time, but COVID forced us decisions that, like, no, we talked about that forever. We're doing it tomorrow. We're doing that tomorrow. And I think that's, organizationally, what I also like, the volatility too, is the things are right as an organization that your leadership teams have talked about for years. It's like, yeah, we should really do that. We should really do that. That was my favorite part about COVID, was legitimately it put us to an inflection point where all those things we've been talking about for a long time, we just made happen. And it's incredible. I mean, even at that time we were 20 years plus in business, but it's amazing when you have those really raw moments where it's like, no, it's okay to trust the things that we've been talking about for a while and just making them happen. Mm-hmm. Some say the catalyst is what is missing a lot of times. So, yeah.
Yeah, I think COVID presented an unusual opportunity for Northland, right? You had mentioned prior to our session today that when a large competitor stepped back from the segments you guys were in, how did you stay positioned to take advantage of those moments without overextending?
I think we were, as opposed to 2008. I think all the work that we had put in, number one, from the markets we were developing, and it was a decision we made, I think, in 2008, and I was not a part of it at all outside of, like, it was our chief credit at the time. It was Jerry Baker. It was Willis Kleinjohn, Gabe Jarnett, all of our leadership group. After 2008, it was that never again mentality where it's like, no, we're going to be in food, fuel, and waste recycling, core consumer staples or staples of the economy or recession resistant kind of businesses. Agriculture had always been a big part of our business. And, going forward, like, that's what really, really helped us come out of '08 as quickly as we did. But it helped us maintain profitability through everything. And it was such a huge thing for us. And I think that was the moment where we decided as an organization, we were going to just adhere and be principled and disciplined with the markets that we're in. We are in niche markets, and we're not going to deviate, we're not going to do 180s onto the business that we're trying to originate. So we kept that discipline. And then when COVID came, in addition to that discipline, we had the syndication network built out, where now the volume wasn't a thing. Like, we are able to scale because of the fundamental processes, relationships we had built when we were in highly bankable segments. When banks take a step back, and that little bit of business that they lose was a lot for us. And we were just really well positioned because of the work we had put in, the 5-10 years prior to that. And I think it's a reminder that as we continue to try to scale and do business, like, fundamentally, we need to stick again to making sure our process, we're disciplined on the data side. We've had the same discussions with, as AI becomes more just adopted, and it's just this Russian wave, where we need to be prepared is, are we fundamentally having the good data quality? Because making sure we go back to the fundamentals of how we're doing business core, because when it's our opportunity to step through, it's going to be like rocket fuel for us.
Mm-hmm.
And I'll never forget that scale piece. It was June of 2020. We just had I think our first company kind of get together. First time that we had an outdoor picnic for the organization. First time we'd all been back together at the office. It's an outdoor facility just we have an annual picnic in June for all the families. And so we just, we had to get together, and I was talking to Willis after, and I said, coming out of COVID, like, based on our core businesses, because all we've been just watching it daily, more apps, everything was fine. We're all in these core businesses that were all, considered whatever it was, exempt from, the stay at home or the lockdown, because was it like necessary or required?
Essential. Yeah.
Essential use,
That's right.
Essential industries.
Yep.
And every segment that we were in business in was an essential industry. And that helped. But then also, like, every business we're in, that's where capital was flowing to. So we were chatting thereafter, and I said, when we come out of this will be rocket fuel for us. And the only thing Willis said, he looked at me with a really serious face, and he said, just make sure the wheels are pointing in the right direction.
So now, fast forward 18 years, elevated rates, tariff uncertainty, a complicated, macroeconomic picture. What are you seeing in your portfolio and your origination pipeline right now, and how is that shaping your credit posture?
So it's been interesting, because we do so much agriculture. We had the luxury, not the luxury, I would say not even the advantage. We got to go through a recession in 14 to like 18. So, you know, we're in a couple of contracyclical industries such as agriculture, where we've been through some downturns there as well. So we have the 08 to 20, but we got hit in our egg portfolio previously. So that's where diversification has been such a big thing for us. So lately, the past year and a half, agriculture has been tough, and not just agriculture. Agriculture is a pretty broad industry, right? It's people just say egg, it is what it is, and we're present company included. Like I do the same thing, but if all you do is lend into agriculture, which are the where we get our money and the farm credits of the world, agriculture is a very broad space. So you've got the protein complex, you've got tree nut, fresh market, fruit, vegetable, corn and beans, grains. Like it's like dairy. It's an incredibly broad industry. Beef cattle, like it's huge. So we've always taken the approach through the ups and the downs to be incredibly disciplined, but be far more, I would say, wary of where we've let loose in times past. So that means obviously bad loans are made in good times. That's just is what it is. But we've always taken the stance where we need to stay disciplined with how we underwrite, but not cavalier. And we've been fortunate to have a really experienced analyst team where we've got, I think, one has been at Northland for 20 plus years. Next one's 13 plus years. I've been here 18 plus years. Another one just celebrated, I think, year 9. And then we hired a 20-year plus analyst here in Tina Belga, who is in Detroit area. We have extremely experienced analyst team and on top of that, we don't auto decision. So we score, but we don't auto decision. And we've done a few things on the transportation side where we've tweaked our cutoff a little bit, which deemed as acceptable. But for the most part, we're trying to maintain the same posture, the same underwriting discipline that our vendors have come to expect from us. And with that, with all the things that are happening with tariffs, was it Tuesday today? And can't imagine what happened today, right? It's just, it's the constant onslaught.
Mm-hmm.
And I think that's the other, like we've always taken that approach too, where just that same discipline, like today is not going to make or break. And, Willis has always had this philosophy too with Northland. It's when it comes down to it, you live to play another day. And, we've always been deal doers, but it's maintaining the discipline of understanding, like, where the industry is, where our markets are at. And then I think what's been essential to us in all the volatility is that discipline we've had in our niche markets, where we understand what's going on. Like if in egg transport, if our grain hopper business starts running tight because insurance costs are higher, well, we know that grain wasn't moving last summer. And that has a huge, it's directly correlated with a lot of the credits that we work with. So we're going to see some higher delinquencies. We're going to see some higher charge-offs. Same thing, like it's understand the markets. But lately, again, we're still in those same markets where nothing is obsolescent. Like we don't have to worry about that component. Obviously there's always change, and you always need to be on top of that change. But I think just by virtue of as diversified as we are, and I said a lot of number ones that our fundamental things that we are, let's say our North Stars are, well, diversification across the board is above all else for us. diversified in industry, diversified by asset types, dollar sizes that you're lending. You just avoid concentrations in every single piece of your portfolio. Who we're getting funded by, our own capital stack. Like, we're diversified geographically, by vendor team, by vendors. Like, we just make that a staple of how we go to market. And it's really served us well, especially in times of volatility like now. It's allowed us that steady growth rate over the past 30 years to, we don't have a lot of years where we were 20+%. Like, it's, if you look back at our average, we're just a steady, 10.5% CAGR and just go about our business. Some years are good. Some years are not as good. But bottom line, it's been adhering to that same steady growth. And I think that's the more volatility you have and the constant news cycle, things you hear, whether it's oil prices. Yeah, I mean, we're going to have adverse effects on our portfolio from certainly the price of diesel, because we do a lot of transportation and more of the commodities. But we won't see that effect for 5 to 6 months, I think. I mean, it's because our those working capital margins are so thin with transportation that it's going to take a little bit of time before it all catches up. But it's kind of how we've kind of maintained through all of it.
That's great. Thank you. Last segment, I'd like to dive into a little bit about the credit culture, extreme ownership, and you touched on a little bit, learning from every loss. Process discipline matters, but at the end of the day, credit decisions are made by people. And what sets Northland apart is not how you underwrite, but how your team shows up every day. You described the ideal analyst as somebody who will own their decisions without fear, no hedging, no blame shifting. You referenced Jocko Willnick's extreme ownership philosophy. How do you hire for that, and how do you build it into a team culture?
Yeah, it's a great question. I think the two things I think hiring for fit, certainly on our analyst team, has been number one, do they fit culture for the organization? But number two, do they fit your team culture? And I think diversity of thought is such a huge thing for us. Like, I don't need another one of me on the team, because I've got certain tendencies and I've got a risk appetite that I don't. If we had a team full of me's, I'd shudder to think what it would look like. Same thing with, we've got so many different personalities that we've hired, and we've been big on predictive index for the personality types, and kind of that assessment. And I think every single one that we have is a different personality type, and that's been super helpful. Number one, in personalities and jiving with our team. Number two, I think that self-confidence and just the willingness to fail and get back up, and resiliency. It's a hard trait to find, but I think we've had luck with, I would say, military and athletes, because I think you get that team-based approach, that resiliency. I mean, they've handled failure consistently, and like, it's always been my favorite to hire. I mean, I was one myself on the athlete side, but my brother was 23 years in the military and an athlete. Both sister was an athlete. Half our analyst team is athlete military. We have military. Brian Anderson is Iraq war vet.
Vince
military.
Yeah,
100% Marine Corps. Like that ability to deal with failure and not be consumed by it, but then also, once you have failure, to not be affected by it outside of, to look at it objectively. And that fostering of that culture is difficult because, who we're accountable to in our decisions, it leads up to the very top. And I think the best part about Northland is Will sets that tone on loss and on credits. And he always says, I've never fired an analyst for losing me money. But the reality is, like, it's not just, the words. It's him sitting in a collection meeting, him sitting in M&Ms and saying, gotta lend it. And if we're not lending it, then we're not losing, then we're not aggressive enough. But it stems from that, and it bleeds into, my management style is very hands off. Like I like to empower people to make decisions, and then I said, and learn from mistakes. And I think you need to give people, that rope, but making sure on the up front that they're people that you trust, personality wise, that have those qualities. And then I think lastly, the quality that candidly, I think you need the most is, do you come to work for the people next to you versus your own, selfish reasons, right? And that's a hard thing to define, but like fostering that, what we've done organizationally just on our credit team is, we would always do happy hours on Fridays. Like it was our time when we were in the office, it was, usually started about 3:00 where we were cracking beers, still working away on the underwrite. And then our sales reps like to joke that we need to go talk to the credit team after 3:00 on Fridays. Like it's a little looser with the old decisioning, but
right, they'll prove everything.
But the reality is, like if we're going to demand these things from us, that accountability, that ownership, and to be accountable for decisions, then there has to be, that moment on Fridays where we had a long week. Like it's not an easy job. You need, I would say, tougher people, mentally tough people, but then have the willingness to, not the willingness, but the opportunity to really let off some steam, so to speak, on a Friday afternoon and say, God, this was a week from hell. And it's kind of carried forward through COVID, where now what used to be that face-to-face meeting now is it's a Friday Teams meeting that starts up at 3:00, and we're still cracking beers. We're on a Teams call. We're still working away, but you start getting into people's lives, the trust that gets built, the trust in each other, and also the desire to go to bat for each other. Like that's, I think, number one above all else. Like that's, good organizations and good cultures have a way to foster that, those relationships that employees have. But then I think that's the added special sauce of like the extra work you put in, and it's not just about yourself. It's how can you do more to help the person on your right and the person on your left. And I think that's why I would say that to athletes, that it's no one's bigger than the game itself. And that was just drilled into me at a young age from my dad. And that's the approach that I've taken as a leader too, is not one of us is bigger than the game. And that's me as well. Like mostly, I not at all. The game is the organization, and even when you get into taking the same approach, when you get into, the likes of, like, say, funding conferences, the EFA or whoever you're competing with, that's the same thing. Not one person that you're ever going to talk to is going to be bigger than the game itself.
Mm-hmm.
And that's the approach that when you try to hire, is you find people with that are super confident, but then the humility that goes with that. And it's we've been very blessed with the people we've had, and we found. And again, they haven't all worked out. I think we've had 2 or 3 in my time that didn't work out. Solid analysts, but other circumstance. But we've been able to maintain that core group for a while. And on top of that, candidly, we ask a ton of them. We ask them to be analysts. We ask them to be, put their sales hat on the syndication side, because all the syndications run through our credit team.
Mm-hmm.
And that's going to put their relationship hat on with continue to foment those relationships they have with funding sources. And on the occasion, we're going to ask them to put their buy hat on too, and look at this deal that's coming in, and see if we can source some deals too. So we ask a lot of our analyst team, but they're the right people to ask of, and it's been I'm very blessed that way. But I think that's the key fundamental. Like this, if there was the team that I'd want to build, like that's the rest of my career. Like regardless, like tomorrow, like whatever happens, I get cut off and we go somewhere else. Like that's the dynamics that I'd move forward with. And it wouldn't be just like, again, an analyst team. You could say whatever team you want, and that's what makes our Northland as a whole. You want to take a global view or a macro view of us, of our personalities. That's the best part. Like we are across the board with personalities, and it's fostered into you take care of each other, and that it's from the very top. That's Willis from the start. That's Jerry Baker. That's Gabe, Brian Eschman. Our leadership, Beth McLean. Like it's fostered down to we hired an admin or an operations specialist here yesterday. Well, that's the standard and the expectation, and it's not lip service either, because it's rarely everything that we actually talk about. It's just the way that we do business, and it's hard to describe. So, yeah, I mean, I got a long-winded answer.
That's okay. That's great stuff. It's a lot. There's a lot there, and I'll tell you. I mean, we met for the first time. Was Marco right?
Yeah, October. Yeah. Yep.
Yeah. So we haven't known each other for a year, but I feel like I've known you for 15 years. And same, Beth, Vince, Brian, Vaughn, just the people in the organization are just wonderful, wonderful people. And I enjoy. I've been to your office a few times. I've seen the fridge, so I know how much beer is packed in there. Haven't been there for Friday happy hours. Maybe next time I'll plan a visit.
Yeah,
try to meet with you guys for Friday afternoon. But no, it's just what you guys are doing over there. It's just wonderful, and when you have wonderful, great people down to earth, it's great people. It's easy to want to be around people like you guys. And like I said, I go to conferences. I look forward to seeing you and Beth and because you guys are always present and you're there. So it's awesome. So thank you for sharing. So before I let you go, we got to tackle one final debate. And given where we both live, where you grew up, and where you currently live now, hardship is kind of a way of life, right? So me being from Buffalo, you being from northern Minnesota, and now in St. Cloud. So let me ask you. Let me ask it this way: Would you rather deal with negative 40, 50 degree temperatures, or 7 feet of snow? Which one are you taking, and why?
So I guess the question is duration. So like anybody can do one snowfall or 1 day of 40 below. But the question is, like, full well, like there are some winters that are worse than others.
Mm-hmm.
So I think it goes back to like the first question, like what I would rather take. I would rather have a cold ass winter where it never got above 30 below than multiple snowfalls where I'm constantly shoveling out. And I think the bottom line for me is like this stage of life with young kids, well, now teenage kids, but I think it's time. The time it takes when you have a hard snowfall, a big one, I think that's entirely a function where you just get tired of spending time shoveling or snow blowing. I would rather have to just endure. Give me the pain and give me the cold.
One to love.
Yeah. And it's funny, like that, us being from, we'll call it of the north and of the elements. I think I heard this from Gabe years ago. There's no such thing as bad weather. It's just bad gear.
True.
But and I think that it applies to probably snowfall too. Is like, do you have the gear to clean up in a fast manner or not? So I imagine if I was in Buffalo and I opened up my door and like it was all snow, like literally packed past the door. Time to invest in where you put your money, and probably be a significant either snow removal service or better gear.
Well, I can tell you, you get that much snow, which I did in one day. Where I live in the lake effect area and higher elevations, and we got 7 feet in less than 24 hours.
That's
So
so
it was
crazy.
thundering and lightning. It settles, so it doesn't look like 7 feet, when it's all said and done. But that's how much snow we got, and it just turns into ice and slush at the very bottom. But yeah, it can wear on you. I mean, you get a couple of those a year, maybe not 7. That's kind of the extreme, but 3, 4, 5 feet of snow in a day. Yeah, I mean, you're just getting hit. And then or you die by death by 1,000 cuts. I'll get 4, 5, 6 inches a day,
Exactly. A day,
and I'll just wake up. Okay, shovel another 6 inches. But then after a week or two, you look and you're like, holy cow, where did all the snow come from? Right?
Yeah.
I agree. At this stage of my life, when you have kids, young kids, they love being out in the snow for a little bit. Or if you're involved in snow sports like skiing, snowmobiling, ice hockey, like, Minnesota, Buffalo, big hockey communities.
Yeah.
I was playing football in the snow. I was playing basketball in the snow. I didn't play hockey. I grew up in a big family. It was an expensive sport. Just couldn't afford it. So I played sports that were cheap, and I'd have to shovel the driveway and play basketball with the backboard on my garage.
Yeah.
If I wanted to get better, otherwise I'm laying in bed and just shooting free throws to
100%.
try to almost hit the ceiling. Yeah. Right. That was kind of how we grew up. But yeah, I would, you can always bundle up. I get it. We would have some January, February's in Buffalo, we would get intense cold. Negative with the wind chills would be 20, 30 below. Schools would close. You'd have to put heat tape around your exposed pipes, to make sure water doesn't freeze, things like that. But, to have that for extended periods of time, I mean, where we live, we joke because we travel a lot, you and I, and we get to go to warmer climates when it's cold in our hometowns, and we're running from the cold to get to the heat. And then you talk about people that live in like Phoenix, they're running from the heat to get to the cold.
Yeah.
We have heaters for our pools, whereas folks in Phoenix and those warmer climates, some of them have chillers just because they have to cool the pool temperatures.
Yeah.
Otherwise, it'd be like taking a bath. That's not fun. So I would rather bundle up and just deal with the cold temps. But I think out of all of those, if you add rain, I hate rain. I'd rather it snow 7 feet than have it rain. I really,
Yeah.
So
I think we had yesterday, I think we got close to 3 inches of rain, and it was like 39 degrees. So, God, I remember, like, I think the worst possible scenario is high 30s, low 40s rainfall. And you talk about like playing in elements. Like, again, I still remember I was in 7th grade, and I was playing quarterback, and my hands had never been so cold in my entire life. And it was rainfall, and I think I fumbled maybe 6, 7 times. But that is the one scenario, like rain is the absolute worst. Play in the snow, can play in frozen fields, but rain it just sucks.
It does. You
got to bring out your umbrella, and there's, I mean, what do you do? Like, I can fish in the rain. That's one thing I can do. I can fish in the rain.
There you go. I mean, yeah. I mean, there are some things you can do. It's just, it's very annoying, and it's, it's misery. You're miserable. You're wet. You can, again, it's about gear, right? I love that. I'm going to steal that from you.
I stole it from somebody else. So.
Well, we seem to both agree. So I guess it's not really a debate. But yeah, I mean, but it does, I would say, I mean, I think it's the weather where we grew up, it becomes part of our identity, right?
100%.
Kind of like our football teams. I can have you on in a year or two, and we can for another podcast, and we can debate which football team's more cursed, the Vikings or the Bills. And hopefully, maybe the next time I have you on, both our teams hopefully we'll have a Super Bowl, and we can maybe not debate that. But
it's funny, I would rather be in your situation any day of the week where you have stability at the quarterback position. And I love watching your guy play, man. There's something about that's I'm not a huge pro sports fan overall. I grew up college sports. I grew up I love high school sports, but the college piece, professionally, I just like watching good players play. And fortunately, for the Vikings, I think we've had our share of good players, like Jefferson as a receiver. But for me, I just really watch good quarterback play, and I'm super jealous of what you guys have had here. Now, again, it takes a lot of lean years before you get there. Hopefully, the Vikings will eventually get there. But man, watching your guy play, it's fun, and through the ups and downs too. That's the best part. It's not always going to be great, but man, you always are going to believe that we've got a chance.
Right. There's no question. We've had last year we had several games where, I mean, we were practically on life support. I mean, I think first game of the year, I believe we had less than a 1 or 2% chance of winning against the Ravens. And we found a way to come back. I think a lot of that had to do with the way the Ravens played so conservatively in the second half. But it was also Allen's, just willing the team, putting them on his shoulders, and just same thing. We had the same situation against the Bengals later in the year, where again we were almost left for dead. Very, very small chance of winning that game. The percentages were low, and we found a way to win because Cincinnati didn't have a running game, and they were just throwing the ball and incomplete passes, stop the clock. Or you intercept, or you have a quarterback gets sacked and he fumbles the ball, and next thing you know, we're winning. We had 21-point turnaround, and the rest is history. So yeah, you got to have the horse. We have the horse. He doesn't have the weapons. If you put Allen on your team, you guys probably win 4 Super Bowls in a row if he's your quarterback, because you guys have everything else. We have a bunch of number 2 and number 3 receivers on our team. At least now we got a stud, and I'm very happy with the other complementary pieces that we have. But now we got the stud, so there's really no excuses, and so I guess we'll see. But yeah,
I love football so much that way, because it's just such a great team game, because you just need it all. You can't be deficient and you just have to be good across the board at every position, and that's. Again, that's why I love it so much, because it's no matter if you have the stud of all studs, at the quarterback position, you still need players all around, and you need, and on top of that, you need a salty defense, and it's just it's such a great. That's my favorite part. It's just you need it all.
Yeah, 100%. So maybe in 2 or 3 years, or when we have you back on the show in a couple of years, if not sooner, we can debate which city threw a better Super Bowl parade. How's that?
Yeah, wouldn't that be great? Yeah.
All right. Well, thank you so much for joining me today and sharing your journey, your perspective, and the lessons you've learned along the way. And to our listeners, thank you for spending time with us on the ACS Portfolio Perspective. If you've enjoyed today's conversation, please subscribe, share the episode, and join us next time as we continue exploring how leaders like Erik across our industry think about credit, risk, and long-term growth. Until next time, thank you for listening.